Well, first of all, as far as the stock market is concerned, I will say this. The first thing is obviously the market is back in the U.S. But one thing I want to caution you, I want to caution you about something is the fact that, as you could see, so the U.S. is up 13.86%. So we're making money since the beginning of the year. But frankly, if you compare to Japan, if you compare to England, if you compare to Germany, the U.S. is not doing that great. Okay, so that what that means for you, my subscribers and my members, obviously, is that there are other opportunities to make money, and it is not necessarily in the U.S. So that's one thing. I mean, look at what's going on with. Germany is up 25% year over year, almost twice of what the U.S. is doing. And now, of course, you can't really compare to France because France is having some issues right now, and I will talk about this at some later date, which has to do with debt, which could impact the U.S. at some point. So you have to be very careful. But the point is, at this point, what you're looking at right now, you're looking at a market that is developing, and you're looking at a market that's looking for ways to know what's going on. And right now, the big topic in the U.S. is, and I think it's a great opportunity, quite frankly, every time this thing happens, is this tug of war that you have between the U.S. and China, right? Every day, in fact, the market took a little bit of a dump yesterday, and it took a dump on Friday, and it recovered. So every time the U.S. China is saying, that's it, we're going to have a war, a trade war, because of what's happening with the rare earth mineral, everybody gets excited. Right? Fields are investing heavily in India. Well, I will tell you, India is a quite interesting situation, and I'll bring it up at some point. But the situation in the U.S. and frankly, whenever you see it, is that whenever you see them actually panicking about a trade war, this is a moment to buy. Why? Because you cannot have a trade war between the U.S. and China. Why? Take a look at the video that I did a couple of days ago. But basically what we're saying is China is not doing so great internally in terms of its economy. Okay, and therefore it needs to sell the products that it's creating to everyone. And China has a huge amount of deflation. China has a huge amount of deflation, and what that means is that the prices of goods in China is going down because they can't sell it, so they need to go out and sell it. And the U.S. obviously, because the U.S. is 25%, the U.S. is 25% of the GDP worldwide, so you cannot do without the U.S. Okay, you may or may not like the U.S. administration, but you cannot avoid them. So therefore, whenever you hear a story that tells you that there's going to be a trade war between the U.S. and China, you want to buy, because there cannot be such a thing. The U.S. needs China, and China needs the U.S., at least for now. The U.S. is trying to expand beyond what is going on with its rare earth mineral capacity. And frankly, I will do a live on this because there's lots of opportunities abound as far as the rare earth mineral stocks. There's a lot of great opportunity there. I'd recommend it to my members. IDR, was it a month or two ago? This thing is up 115%. And again, as a member, you get to see all these things. But the point is that there's lots of opportunities. Now, let us take a look. Let us take a look at some interesting charts that I found for you. Let's take a look. First of all, what drives the stock market, right? What drives the stock market? So let me show you what drives the stock market, and you're going to find it interesting. Okay. So let's take a look at this chart first of all, right? So if you look at this, and these are great opportunities, quite frankly. What you're seeing right now is you're seeing the annual returns, well, the year-to-date returns, right, and the April 8th to date returns. So what is Goldman Sachs doing? Well, take a look at this, right? They are basically at 128% on U.S. drones, and look at quantum computing. Okay, 124%. Meme stocks, non-profitable tech, short-term rolling, royal favorites. This gives you, and obviously, if you look at the bottom, you could see where the S&P 500 is, 14.5%. So it behooves you to look for opportunity in the stock market all the time. You cannot just rely on the S&P 500 index for obvious reason. So it makes sense, right, for you to see what else, and listening to channels such as myself, to say, okay, what else is going on? Well, obviously, if you look at the things like a U.S. commodity, they are up 48%. Year to date, U.S. commodity 30% compared to the market at 13%. Take a look at metals, 44%. Quantum computing, 134%. I'm going to do a session on quantum computing because I think that there's a lot of opportunities. Now, of course, you don't want to have a 500 stock portfolio because that'd be too much, right? But, if you have about 10 good stocks, and the stocks that I'm usually looking for tends to be stocks that that pay well, right? You want low debt. So what I usually look for is EBITDA to interest expense, very high. I'm sorry. Meaning that the ability for them to pay their interest multiple times EBITDA. So we're looking at potentially 10, 12 times. So basically, I'm looking for low debt. Maybe if you may not understand everything I'm saying, but that's okay. Basically, what I'm looking for is low debt. Okay. The second thing I'm looking for is obviously growth. What am I mean by growth? Well, you got to have some, look at historical, what the numbers are, and you could see, well, basically at the end of the day, we're looking at, 10, 20% growth year over year. Okay. Then what you want to look is what nobody is buying. I've been recommended, take a look at my channel and you could see I've been recommended small caps for the longest times. These are companies with a capitalization of less than 2 billion. Okay. So I've been recommending and I've been buying, and I've been told you. One of them was GCT, Google Cloud Technologies. And that stock is doing fantastic as well. So what it is, you need to look for cheap, so therefore low P. You need to look for growth, and you need to look for low debt. And obviously what's happening right now, which is fantastic, is the fact that we're doing quite well with the small caps because rates are going to go down. So there's a push for those small caps. And they're being pushed simply because as a small companies, if rates are going to go down, and trust me, they're going to go down because the U.S. administration wants the rates to go down, and they're doing everything that they can to do it. So you can't go wrong at this point. Now, can you go wrong forever? No. Okay. No. But you can go right for now. My only concern is, when, how far that's going to happen. I don't know. I wanted to show you, and I can't find it, but I wanted to show you the drivers, right, of the stock market. Just give me a second, and I think you're going to like that one. These are basically, what drives the stock market, right? What are we saying? You see this? This is a very important chart. This is an extremely important chart. What this shows you is that from 2020 to today, right? What drives S&P total returns? You have earnings, you have multiples, you have dividend, you have total return. And as you could see, every year, the potential, the growth potential in green is very strong. Okay, and overall, as you could see, 78% of the growth of the stock, the return of the total return of the stock, basically, which has been 125% between 2020 and 2025, is driven by earnings growth. But there's also a multiple growth. What does that mean? Well, what this means is that we first by saying, why is it that the P ratio for NVIDIA is around 50, and the P ratio for a Tesla is almost 3 or 4 times that. Why is that? Well, because investors are willing to pay more and spend more money for it. Why is that? Well, that's a mystery, right? Why are you willing to spend 100 times on one guy and 50 times for the same amount of earnings? That's because your expectation. And this tells you that, the multiple growth is a piece, as you could see. In 2020, it was much larger. In 2022, it was almost also large. And, the growth, the way you value a stock, so therefore you need 2 things, right? You need dividends. Okay, fine, but that's a small part. You need 2 things. You need the earnings growth, and you need the multiple growth, right? And obviously you need earnings. And I will tell you something, my friends, is that right now the earnings are here. We've got good earnings. So not so sure, what everybody's saying, the recession and all that. No. Don't believe any of that. What you want to know is what you want to understand is that as long as we have earnings, and we have earnings in the U.S., the GDP is supposed to grow by 3% plus this year. So we don't have an issue. So all you need to do is look for the opportunity, and you want to make more than 13%. We're not, I did not create this channel, and I don't have members and subscribers for 13%. We're looking at 30%. We're looking at, larger amount. And frankly, because you want to get paid for the risk in the stock market. At the end of the day, returns is one thing, and I always tell that. What is the risk that I'm having in this market? And frankly, as you could see, even I am showing you a bunch of returns, but I'm not showing you a bunch of risks. What is the risk of the stock market? What is the risk when you cross the street that you're going to run over by a car? You are definitely thinking about that risk, right? You're not thinking, I want to cross the street. No, you're thinking, I don't want to get run over, and then I want to cross the street. That is the most important thing that you need to do. Okay. Now, so they say we can't lose money in the stock market right now. Well, if you go for anything having to do with some gold, everything having to do with rare earth mineral, because this is a big thing right now, a rare earth mineral. Anything having to do with small caps, because nobody cared about it, although now more and more it's becoming a thing, so be careful. You don't want to, but we still have room to grow. And everything that's growing, maybe quantum computing, although that's a very difficult field. You have to really know what you're doing. So there's opportunity. Now, and this is what you have to be careful. What about inflation? And unfortunately, we don't know, because as you know, in the U.S., there's a shutdown. And because there's a shutdown, we don't get to see what the numbers are for the CPI or for inflation. It was supposed to be released today, but we don't have it, because the government has been shut down. I did a video on shutdowns, government shutdown, and that thing is going to last for a while. And the reason it's going to last for a while is because essentially you have the Democrats on one end, and they're basically saying, I care about healthcare. Okay, well, we all care about healthcare, and the Republicans are saying, why did you shut the government down? This had nothing to do with healthcare. We didn't include anything new. So basically what's happening in the U.S. is that the Democrats are making a stand on healthcare, and because they're becoming irrelevant, so they're making a stand. And they have to hold on to that stand. And the longer they hold on to the stand, the stronger they look, because, of course, there is the midterm elections. What else are they going to talk about? What else are the Democrats going to talk about? Unfortunately, they're doing it at the expense of the shutdown. I mean, it's a very worthy cause. I mean, because a lot of people are going to be spending more money on healthcare very soon. But the Republicans are running high, and obviously, as you could see with Gaza and the U.S. administration. Geez, they create peace literally, although it's a ceasefire. But the point is that they're riding high. They're riding high. They're riding great. The market is great. Everything is fantastic. So they can't go wrong, at least for now. What could cause the market to go down? That's a question, right? And I will tell you one thing is, unfortunately, you have to be careful because let me show you something else here. Right? You see this thing here? So basically, this is the S&P 500 after falling 2.5% on Friday. Now you will notice, and on the left, I have a bunch of historical chart that shows you numbers, dates that shows you, whenever the market dropped. And most of the time, over time, it recovers, right? So you don't want to be FOMO, fear of missing out. The market goes up and down, up and down, up and down. So you don't want to be the one selling on Friday whenever they talk about trade war, right? You want to be the one buying. But depending when you need the money, how bad can it get and how fast can it get? That's a question, right? That's the issue that you're having. But as you could see overall, whenever the market drops, after a while it recovers, and it has recovered. So this is not such a humongous thing. What you need to worry about is inflation. And let me show you this chart. This is the let me show you the inflation chart. And that one you need to take a look at because just give me a second. Let me show you because what's happening with inflation today, right? What is going on with inflation? And inflation right now is not doing great. Let me, why am I not seeing inflation here? Right? Where the heck is my inflation chart? Ah, here we go. Look at this. That's a problem, right? Because since May, as you could see, this is using Trueflation, by the way, and you could see since May, inflation has been going up, and it's not a straight up. It's gone up a lot since May, and then it's kind of moving up and down, depending who you listen to here. But this is based on like millions of points. So it's a very accurate number. So when you look at this, what this is telling me is that inflation is not out of the woods yet. And that is a potential problem. The reason that's a potential problem is because you cannot have inflation and lower rates at the same time. That's a bad combination. So overall, right now, my message for you today is as follows. The market is going to keep going up until people stop talking about a potential crash. And that's when you need to worry about. So, see you soon.